day to all. Today I will give you outlook on three sectors which has very high potential in coming years. If we take outlook of 3 to 5 years, these sectors definitely going to command the growth. All these three sectors has a very big potential when it comes to export, when it comes to supply chain, when it comes to defense. All these sectors going to participate in a bigger way in Indian economic growth. So let's start and try to understand their role and how they will achieve this. So the first sector which has a very big role to play is logistics and supply chain. The current market size of this sector is around 230 billion. If we talk about 2030, 5 years from now, with general conservative target, it's reaching somewhere around 400 billion. But some of the analysts with their aggressive approach, they are targeting around 800 billion. Means this sector can easily achieve 800 billion of market size by 2030. They are anticipating a growth of around 8 to 10% of CAGR. Now, what are the key triggers which will take the growth up to 800 billion is e-commerce boom in the domestic market, manufacturing growth, Make in India especially helping that, infrastructure boom, the way government is focusing on infrastructure development, warehouse and logistic parks, the way new warehouse setups are coming all around India, new logistic park, new SEZ are getting developed to provide an integrated solution. So these all are the key triggers. Same time, some of the fast growing segments like third party logistics, cold chain logistics, warehousing, REITs style assets, then technology integration into logistics. These are also adding trigger to their growth. Now, if I talk about some of the key risks about this sector, then high logistic cost. In India, it's around 13 to 14% of GDP. And if we compare this with the global figure, it's around 7 to 8%. So still, our logistic cost is higher by 4 to 5%. Definitely, if we want to compete with the global pairs, if we want to be an export-oriented nation, then we need to reduce this logistic cost on which government is eyeing. That's why you saw so many new projects. Either it's infrastructure, it's warehouse, it's SEZ, means all kind of things are running simultaneously. Now, the next risk is fragmented industry. As we know, our transport industry is very fragmented. Very small players all over the place, they are working. So we need to make them organized and we need big players. That will also help them to reduce the cost and make more competitive. The next risk is fuel. As we saw, few days of war between US and Iran, and straight away fuel price has gone high. So fuel is always a big trigger in any sector, any industry in India, as we are 90% dependent on the imported oil. Now, if I talk about some of the key logistic companies, then if we talk about the international players who are operating globally, they are Adani Ports, then you have JSW Infra, then if we talk about domestic players, you have TCI, then you have All Cargo, you have Gati, you have Mahindra Logistics, then you have Delivery. So you have multiple players out there, Container Corporation of India, then you have Gateway, Black Buck. So multiple players are there. You can do some of your research, pick the companies after seeing the valuation, the price, the growth, the work order, all these things you must check and then take a call. If I talk about the growth, future growth for this sector, it's going to stay somewhere around 12 to 20% in next 3 to 5 years. Now, the next key sector is defense. As we know, earlier India were importing almost 80 to 90% of their defense requirements, and now it's upside down. Now we are self-sufficient and we are manufacturing 70 to 80% of our requirement, and same time we are eyeing to export also, and this makes our defense sector very demanding and big opportunity is there if we talk about 4 to 5 years. Now, if I talk about some key triggers, the first trigger is government spending. Every year government's spending on defense equipments is increasing. The second trigger is work order. The work order of these defense companies are as high as 5 to 7 years. Like if I give you an example, HAL has a work order of around 1.8 to 2 lakh crore. So if they go in the normal pace, it will take them 5 to 7 years to complete the existing orders. Forget about the new order. So they are overbooked. Same way, some other companies, they also have a heavy order books. Now, the third key trigger is export opportunity. Once India had started their own things and passed in war with Pakistan, they had utilized all these defense systems. Many export orders are also coming. Many countries, they are in discussion with Indian government because they want to buy our system. Either it's a anti-missile defense system, or it's drone, or it's a radar system, naval ship, missiles, all these things. Some countries in Africa, or you call Southeast Asia, Middle East, they want to buy from us. So this all will create a big time opportunity in the defense sector. Now, the fourth key trigger is the private participation. Many private companies, they are also participating in the defense sector. You talk about Data Patterns, Solar Industries Limited, then Paras Defense, you have PTC industries, you have Adani, you have Tatas, you have Mahindras, they all are into defense sector now, and one or another product they are developing, they are spending a lot of money on R&D, and they are coming with the new system or new equipment or new heavy duty trucks. So private participation is giving a new dimension to the defense sector. Now if I talk about the key risk in the defense sector, as we know, higher valuation was the biggest risk. 3 to 4 years last, we saw how these defense sectors were booming and price were skyrocketing. Now in last 1 year or so, many stocks has come down, has cooled down. Now it's moving sideways. So still you need to eye and you need to check, you need to research which has the best value for money to buy. So this is the only risk. But yeah, if you are buying for the long term, 3 to 5 years, still from here, definitely these stocks will go on the higher side. You must be aware about, but still if I talk about some of these defense sector key shares, then you must be knowing about HAL, then BEML, you can go for BEL, you can go for Astra Microwave Products, then you have Bharat Dynamics, you have Solar Industries Limited, Majgaon Docks, Garden Ridge. So all these are participating here and there. Some is making shipping, some are making submarines, some are making missiles, some are making fighter planes. So they all are engaging themselves in manufacturing different products related to the defense. Government is also eyeing on big export deals, and same way they are eyeing on big technology transfer from Russia, from France, so that whenever they are buying some foreign companies product like Rafale and all, they are doing technology transfer same time. So in future they can manufacture in India and they can export to the third country. If we talk about the future growth, it's going to be a stay somewhere around 12 to 18% CAGR last 3 to 5 years. Now the third sector you have to eye is shipping sector. This is a very key sector, and strategically also, if we talk about total trade volume which India is creating, 95% of those are moving through sea route. If I talk about value, it's 70% of the trade value which is moving through maritime transport, and role of foreign players are too much in this when it comes to export. And the way Indian government is eyeing to increase export day by day, they want to bring India on the world map and make India a manufacturing hub. For that purpose, shipping and maritime needs to be controlled. When it comes to vessel, it comes to shipping, it comes to container, all these things are the key ingredients for exporting. If I talk about current scenario, China is controlling almost 80% of shipping industry. Either it's manufacturing of ship or manufacturing of container or manufacturing of vessel, manufacturing of LNG tankers or it's crude oil tankers. So all these things India need to focus on, and for that part only government is spending almost 2.5 to 3 lakh crore rupees to develop the infrastructure and bring the company up to the mark. Same time government is also trying to improve the port capacity so that more bigger vessels can port in our yards. They are also focusing on shipbuilding and domestic fleet growth. So tomorrow we can provide services to all the foreign players also. By 2030 government is eyeing 5% share when it comes to global shipbuilding. Currently it's not even a single digit, it's 0.05 or 0.07%. China is controlling it by 80% market share. So now government is eyeing to grab 5% by 2030. So you can imagine how this will go in future. They are focusing to have more larger Indian shipping fleet, more domestic shipping containers and more stronger maritime ecosystem so that we can compete with the foreign players. If I talk about the risk, it's always fuel price, then you have a geopolitical conflicts, then you have supply of vessels, supply of container. As we saw earlier, the one shipment was costing around $4,000. All of a sudden, within couple of weeks, it went to 8,000 because now due to war situation, everything is here and there scattered. So if you control yourself, definitely India can control themselves and they can make their ecosystem. Then they can control the price also when it comes to Indian export. Some of the key companies like Shipping Corporation of India, you have Great Eastern Shipping Company, then you have CMAC Limited, you have Adani Port who is participating internally also and internationally also. If I talk about annual growth rate, it will stay somewhere around 10 to 15% CAGR if we talk about 3 to 5 years. Now the fourth, the sector which is going to be key is metal. If we talk about metal here, precious metal also and metal also. Precious metal we saw after a big bull bull run. Now it's kind of cooling off and going sideways price, but still potential is there. If you want to buy for a longer period, like 3 to 5 year vision you have, definitely you can buy now and leave it, because still potential is there, the way geopolitics and de-dollarization is happening. But if I talk about other metals like steel, aluminum, copper, zinc, these metals are also going to be on the higher side very soon. One thing you need to understand, the industrial use of all these metals is increasing day by day, and manufacturing is still limited. So there is a gap between demand and supply. Demand is on the higher side and supply is on the lower side. To manufacture the metal, there's a big lengthy process which takes time. And the way our EV, you talk solar panels, you talk about defense requirement, you talk about semiconductor, all these sectors, they need a lot of these metals. So definitely you can eye on the metal sector also. As we know, Indian infrastructure is booming. So in infrastructure also, lot of steel, aluminum, copper requirement is there. If we talk about some other manufacturing, you talk about EV and solar, lot of solar parks government is establishing, private companies are establishing. For that also, they need a lot of metals like copper, they need aluminum, they need nickel, they need lithium. So metal is going to be a big sector in coming 4 to 5 years. Real estate, as you know, steel's requirement always is there. Then you have aluminum requirement. The major risk is the commodity or the metals are very fluctuate. One of the biggest risks for metal is the price fluctuates very much due to low in supply, high in demand. Some of the countries, they intentionally control the bigger supply part, like China, they need a lot of these metals. So that's why they block the manufacturing. They don't give to anybody else. If I talk about one of the data points, China is consuming almost 50% of global metal. So you can imagine if India wants to compete with China the way they are doing now, they want to be manufacturing hub, then definitely metal is going to play a big part. And you can imagine what metals price can go from here. Some of the key metal players, Tata Steel, JW Steel, Hindalco for copper, then Vedanta, they are in multiple metals. Then you have Hindustan Copper, then you have Hindustan Zinc, you have, so like this, you have multiple players who are in mining and all, and they are manufacturing and providing. If I talk about the annual growth forecast, it will going to stay somewhere around 12 to 20% in next 3 to 5 years. So this metal sector also is looking very potential. So definitely if you have a preview for 3 to 5 years, then you can take a call, you can do your evaluation research, little bit of financial fundamentals about these companies or some other company, and then you can take a call. So these were 4 sectors which I give you and seems to be very high potential. So these were the 4 sectors which has very high potential and it can give you a multi-fold return in coming 3 to 5 years. Now definitely little bit of research you can do yourself also, and then try to see how you want to rearrange your portfolio or you want to buy some of this share for longer term. For more informative and research video, don't forget to subscribe my channel, same time press the bell icon, so whenever I'm putting some video you will get the access straight away. By the time I come with the next video, stay safe, stay healthy. Thank you.